Hi, this is Lara at Elliott Wave Stock Market with your free Dow analysis for the trading week or trading month ending up to Friday week ending Friday the 14th of October. This is my main wave count on a daily chart for the Dow. I also have an alternate which is not nearly as bearish. It expects a new low below the end of the credit crunch low as fairly likely, but not necessary. It still expects also downwards movement. My main wave count sees the Dow in the early stages of a primary third wave down, which must subdivide at black or intermediate degree into a 5-wave impulse. Black wave 1, I think, ended here with a truncated fifth wave. We'd expect to see a truncation on a fifth wave after a third wave that travelled too far too fast in this third wave, and it did exhibit some really strong downwards momentum, so that certainly fits that guideline for a fifth wave truncation, and the structures particularly are correct. This is a 5-wave impulse and I wouldn't want to see it any other way. The second wave correction at intermediate degrees probably going to remain a relatively shallow correction below the 50% level of wave 1 black, and it looks like it's going to be a pretty typical looking expanded flat correction. This is a 3, this is a 3 and this is a 5. I think wave A here had a truncated C wave and is a flat correction. A B wave, a zigzag downwards, which was a 153% correction of wave A. And now a 5-wave structure to the upside completing for wave C, which is unfolding as a simple impulse. And we have a little bit more upwards movement to go. It may end during Monday's session, possibly by the end of Tuesday, and probably by Wednesday it should be over, and we should be looking at a third wave within a third wave to the downside. The next movement down for the Dow should be very spectacularly strong. To the upside, 2 can't move beyond the start of 1. This wave count's invalidated with movement above 12,876. Taking you now to the hourly chart, we were going to have a look at this structure in more detail, where the low for wave B blue down here is this point down here. This is our 5-wave impulse for wave C. This first wave at pink or minute degree has an extended fifth wave within it, a little zigzag for 2. 3 is a nice impulse with an extended fifth wave again. 4 is a little zigzag, and the fifth wave should be unfolding again, probably with a fifth wave extension. This fifth wave at pink degree cannot be longer than the third wave because the third is shorter than the first, and the third can never be the shortest. So the fifth wave has a maximum limit. Its limit is equality with 3 at 11,951.5 points. So it's unlikely we're going to see price move above that point. The fifth wave at pink degree may end about midway in this trend channel. I've drawn this using Elliott's second technique from 2 to 4 and a copy on 3. There's no Fibonacci ratio between waves 3 and 1 pink, so it's more than likely then that we will see a Fibonacci ratio between the fifth wave at pink or minute degree and either the first or the third. At 11,694.06 points, wave 5 pink will reach 0.382, the length of wave 1 pink, and that price point is fairly close to 11,651.11 points, where wave 5 green here will reach equality in length with wave 1 green, so a little bit more upwards movement before it's over. This third wave here at green degree within the final fifth wave also has no Fibonacci ratio to the first wave at green degree, so again it's more likely that we will see a Fibonacci ratio between the fifth wave and the first, and as these two calculations are fairly close by, there's a reasonable probability that price may end up within this zone or very, very close to it. This may end during Monday's session. I don't have a lower invalidation point for the Dow for you today because this analysis is going to have to last all week. In the very short term, it's very unlikely that we're going to see movement below this price point when markets open on Monday below 11,530.81 points, while the fifth wave to the upside ends. When that's over, we will be expecting some very strong downwards movement. We can use this trend channel for 2 things: to tell us where the fifth wave is likely to end, and particularly to tell us when it's over. When we can see a good couple of hourly candles below, outside, and not touching this parallel channel, then we can be reasonably confident that wave C blue is probably over, and so wave 2 black is probably over. Expanded flat corrections do not lend themselves to parallel trend channels, so we have to use a parallel channel around the final wave within the flat, around the C wave. When I know where the second wave correction is finally ended in a few days, I'll be able to calculate a short to mid-term target for wave 3 black to the downside for you. And that third wave to the downside should take the Dow to new lows, and it should take a couple of weeks to unfold. That's all for me today with your Dow analysis. and I hope that everyone else had a fabulous weekend. I'm going to move my YouTube channel to a new channel. You'll find the link below this video. If you can't find the link and you forget to come back to this channel to find the link, just look up Elliott Wave Stock Market on YouTube.